Hi, this is Atif. Hope you're well, and welcome to the new update on Monero or XMR. And you are watching Moon 333. Today, I want to show you how the Monero has formed a wedge pattern on the long-term weekly chart, and we will also watch these combination of these indicators, how they're synchronized with the movement of the price action of XMR within this wedge pattern. And I would like to show you the different support and resistance level on this daily chart, and we will also watch how the simple moving averages are moving with the price action. And finally, I would like to show you this very big bullish bad pattern that has been formed on the monthly chart by the price action. And we will also watch this bullish crab pattern that was formed in the month of March when we faced a very strong bearish trend. So let's start the video, but before that, I would like to request you, if you didn't subscribe to my channel so far, then do subscribe it, and do hit the like if you like the video, and do share your comments in the comment section. I'll definitely try my best to reply your comments as soon as possible, and do share my videos as well. And the information I'm providing in this video is for educational purpose only. This is not intended to be investment advice, so please seek a duly licensed professional and do your own research as well for investment advice. My friends, on the long-term weekly chart, we can see that the price action of Monero has formed a wedge pattern, and we have 1, 2, 3 strong efforts or attempts by the Monero to break down the resistance of the support of this channel. This was a very strong attempt, and we have 1, 2, 3 the 3 attempts by the Monero to break out the resistance of the wedge, and this attempt was the most strongest one. And here I would like to show you some more indications that I am feeling that this time the price line will not move up to this level, up to this resistance level to have a breakout. The reason behind that, if I place the volume profile, that is my favorite indicator. I always use this indicator, and you can also observe that I always use this indicator in my every chart and video. I'm just placing this volume profile on the complete price action moving within this within this wedge pattern, and now we can see that we have a trader's interest very low above this $89 level, and we have a very low interest of the traders below $41. And the critical thing that is, we have the point of control of this volume profile at the support of this wedge pattern that is almost at $47. Therefore, there are strong chances that this point of control of the volume profile will pull back the price line toward itself, and we will have another retest by the price action of the Monero, that it will retest to support again. And why I'm saying that, there are some more reasons behind that. I'm definitely going to show you that. If I place the Bollinger Bands, and just placing the Bollinger Bands, then we can easily observe that at this time, the Bollinger Band, the upper bands of the Bollinger Band is below this resistance level of the wedge. In order to have a powerful breakout, this Bollinger Band should be out of the resistance of the wedge. If it will be out of the resistance of the wedge, then definitely it will be easy for the price action to break out this resistance. Otherwise, it will play the role of very strong hurdle or resistance that can stop the price action to even reach out at this resistance level of the wedge. And if we see this, the trader's interest that is up to almost $89, once the price action will be moved out this area above this level, then there are strong chances that it will be dropped down again up to the POC, or the point of control of the volume profile, or within this area where we have the strong interest of the traders. Therefore, we need this interest of the traders should be developed more than this level. As much this interest of the traders will be moved up, it will be easy for the price line to have a breakout, to move up more from here, and to trigger a powerful bullish divergence. And as much this interest of the traders will be moved up, the point of control of the volume profile will be also moved up with this development. Now, if we watch on the same weekly chart with the combination of different indicators, like I'm using the stochastic and the MACD, the moving average convergence, divergence, and the momentum indicators. At this time, we can see that movement of the price action is very much synchronized with the signals of these indicators. For example, we can see that first time when the price action has hit at the support of this wedge pattern, then we can see that finally we received, first of all, we received a weak bearish signal. That is a kind of bullish signal that is showing that the MACD is turning bullish now. So the MACD was turning weak bearish from strong bearish here on the candlestick of 24th of December. And after that, we have received a weak bearish signal by the momentum indicator, and finally we have received a bull cross by the stochastic indicator. And after that, we can see that the price action took a powerful bullish divergence, and the price action attempted very hard to break out this resistance of the wedge. And after that, we can see that again the price action, this stochastic has given the bear cross. This blue line crossed down this red line, and after that we can see here after this bear cross, the MACD, the moving average convergence divergence, turned weak bullish from strong bullish, and the momentum also turned weak bullish from strong bullish on the candlestick of 1st July 2019. And after that, we have witnessed a major drop that led the price action up to the support of this wedge. And after that, we can again witness that the momentum was turned bullish, and before the momentum, the MACD was already turned bullish. It was a strong bearish, and it was turned weak bearish. And after these two signals, we also received a bull cross by the stochastic, and the price action made another attempt to break out the resistance of this wedge. And after that, we can again see that the stochastic has given the bear cross, and the MACD was turned weak bullish from strong bullish, and this momentum indicator also turned weak bullish from strong bullish on the candlestick of 2nd March, and we have witnessed a major drop. Even though even the price action has hit the spike beyond this support of this wedge, but this support was very strong. Therefore, we can see that soon the price line has retraced back in this wedge again. But this time, there is a little bit different move by these indicators and the price action. For example, we can see that we have received a bull cross from the stochastic, and we have also received a bullish signal that the MACD has turned weak bearish from strong bearish, and the price action has started the bullish rally before the momentum gives us any bullish signal. So far, the momentum did not give the bullish signal. Before that, whenever the momentum has given the bullish signals with the combination of these two signals, the price action after that has started the bullish move. But at this time, the price action has started the bullish move only on the bullish signals of these two indicators. By the stochastic, we have received a bull cross, and we have received the weak bearish signal by the MACD. But this momentum is still ignoring the bullish signals of these two indicators. We can see that this momentum indicator is turning strong and strong bearish. So this is a little bit critical. Therefore, and we can see that at this time we have a very weak bullish candlestick. Even though the week is just started, we cannot say anything about with the confirmation that it will be a weak bullish candlestick. But so far, this is, I think, the first day of the week. At this time, it is spinning candle. At the mid of this week, we can say anything with the confirmation whether this candlestick will be bullish or not, or it will be weak bullish or bearish. But so far, this situation is a little bit critical, that this momentum indicator is ignoring the signals, the bullish signals of these two indicators. Therefore, I have some fear that this time the XMR can retest this support of the wedge from here. It can be dropped again. Now, if we switch to the small time period, the short time period daily chart, then we can see that first the price line broke out this first resistance level at $44, and after breaking out this resistance level, the price action retested this resistance and moved up after a successful retest. And after that, it faced a hard resistance at $58.42, but after all the price action has broken out this resistance of $58.42, that was very strong resistance, as we can see that since December 2018 it has been working sometime as resistance, sometime as support. Like for example, here it has been working as a support, here it has been working as resistance, and now it is working as a resistance. And now after breaking out this resistance level, the price line is retesting this resistance level as a support, like it has retested this resistance as a support. Once the price line will be able to retest this support successfully as this previous resistance as a support successfully, then we can expect that on the long term, the price line will continue this bullish rally and it will move up to this resistance of the wedge. And if we see the moving averages on the daily chart, then we can see that the price action turned very strong bullish after the month of March, and we can see that first it has broken out this 25 moving average, and it has also retested this moving average as a support. Then it has broken out the 50 simple moving average, and after breaking out this resistance level of 50 simple moving average, the price line retested this previous resistance as a support and moved up and faced some difficulty to break out this 200 simple moving average. After first attempt, it was dropped down, and after second attempt, it has broken out the 200 and the 100 simple moving averages on the one go. Now therefore it is retesting the both moving averages at one time. We can see that at this time it is retesting the 100 simple moving average. Also it is retesting the 200 simple moving average as well. And if we see this powerful bearish candlestick, it has almost broken down this 100 simple moving average. More than a half a candlestick has dropped down than this 100 simple moving average, but we have a strong support of this 200 simple moving average, and the 25 simple moving average is moving up to form a golden cross with the 200 simple moving average, and we also have this 50 simple moving average moving up to form a golden cross with the 200 simple moving average. If these two golden crosses will be formed, then the price action will be saved to break down this 200 simple moving average support. But if this support will be broken down, the 200 simple moving average will be broken down, that it will be very easy for the price line to break down the 50 and the 25 and the 50 simple moving averages, and definitely after that the price line will again drop down here at the support of this wedge. And finally, I would like to show you this very big bullish bad pattern that I have been showing in my previous articles and videos as well. That has been formed on this monthly chart, and this is a very powerful bullish pattern. We can see that since October 2018, the price action has entered in this potential reversal zone of this bullish bad pattern from 0.786 to 0.886 Fibonacci level. Once this potential reversal zone was likely to broken down in the month of March 2019, we can see that we had a very weak spinning bearish candlestick that was completely open and closed below this potential reversal zone. But in the very next candlestick, the price line retraced back in this potential reversal zone or buying zone of this bad pattern again. And after that, we have a very strong bearish trend in the month of March 2020, exactly after a year. In the March after the March of 2019, now in the March of 2020, we have a very strong bearish trend, and we have witnessed a bearish spike up to $26.10. But even though this spike was beyond this potential reversal zone, but we did not have any single candlestick that has been closed below this potential reversal zone, and now we can see that the price line is retracing back and moving back within this potential reversal zone or buying zone of this bad pattern. And we also have a very strong and final resistance level of $380 within this sell zone of this bad pattern. As per Fibonacci sequence, now the price action is supposed to be entered in this sell zone or Fibonacci projection. This is the projection area of A to D leg. This is the projection, and this is it should be entered in 0.382 to 0.786 Fibonacci level. So this trade or this pattern can produce up to 560% big gains, and I'm expecting once that the price action will be entered in this sell zone or Fibonacci projection area, then it will retest or it will make another attempt to break out this resistance, this final resistance of $380. And if the price line will be able to break out this resistance level of $380, then the price action can achieve the higher than the previous high price. But so far it is moving in this potential reversal zone, and we can also use this maximum extent of the potential reversal zone on the monthly chart candlestick as our stop loss. And I would like to show you this crab pattern as well that I have been showing in my previous videos and articles with you, that after a strong bearish move or bearish trend in the month of March, when we had this strong bearish candlestick that has hit the spike beyond this potential reversal zone, the price action has completed a bullish crab pattern, and I just predicted that from this potential reversal zone of bullish crab pattern, it should take the powerful bullish divergence, and as per Fibonacci sequence, it should enter in this sell zone or Fibonacci projection area of A to D leg, like we are expecting, and in this pattern as well, that it should enter in this area. And now I'm playing this idea. This is the situation up to 17th of March when I published this chart. And after playing this idea, we can see the current situation where the price line is moving at the moment, and we can see that as per Fibonacci sequence, the price action took a powerful bullish divergence from here and produced more than 133% profit, and at this time it is moving in the sell zone of this crab pattern. So this crab pattern was very helpful for the price line to push it back in this potential reversal zone of very big bullish bad pattern on the monthly chart. So I'm expecting a little bit bearish move if we will the price line will break down this support and also the 200 simple moving average support as well. Then we can see that the price line again retest this support of this wedge pattern that is almost at $45, or it will at least reach up to this level of point of control that we have almost at $47. But if the price line will be able to retest this previous resistance of $58.52 as a support and move up, then this bullish rally will be continued, and we will see that the price line will reach up to this resistance of the wedge that is up to almost $88. And when the price line will break out this resistance of this wedge, then we can expect that this bullish bad pattern will be executed, and after when the price line will be entered in this sell zone or the Fibonacci projection of A to D leg, then we can expect that the price line will make an attempt to break out this resistance of $380. That is the final long-term resistance for the price line of XLM. So this was the update so far by the price line of Monero. If I'll have more updates, definitely I'll share with you in the form of videos and articles as well. If you didn't subscribe to my channel, then do subscribe it, and do like my video, and do share my videos as well, and do share your comments in the comment section. I'll definitely try my best to reply you back as soon as possible. Take care. Goodbye.